Alright, so for another understanding of market cycles and price action in crypto, I want to explain a concept called the big long and how this is related to a common and recurring pattern in crypto, Bitcoin, but also the altcoin market, basically the entire crypto market, a certain pattern that keeps repeating cycle after cycle, and this is how people make the biggest amounts of money in crypto in the basically the fastest amount of time. So what is the big long? The big long is essentially a mentality, a mindset, and I guess an understanding of crypto which accounts for its reflexivity, which is a topic that we're going to talk about in this section of the course, during the early to mid stages of a bull run, where a positive feedback loop kicks in that sends price only up. So in the stock market, the price action of the stock market is not really reflexive. It's very much slow and steady up or slow and steady down. And I'll show you that here quickly, where you'll see that stocks, when they crash, they obviously go down quite a lot, but stocks are not, I would say, exponential in nature, not at least on this time frame. You can see that the price is like steady up, steady down, steady up, very much steady. Crypto is much more about the exponential nature. It's much more like this, where the later you get in a bull market, the more volatility the market is, and the faster the appreciation of the price tends to be. Early in a bull market in crypto, price is very slow, it slowly goes up, and then all of a sudden it gets to a point where it basically goes ballistic, goes parabolic. And it's this period here which is where you would capture the big long, and that's what we are referring to. So let me show you what it would look like on a chart. So let's look at this and pretend this is the Bitcoin market cycle. This is the bear market accumulation range, this is the bull market, the top of the market, and the bear market. So as we just said, the big long is a mentality and mindset and approach which accounts for the fact that in the early to mid stage of a bull run, we reach a certain point where prices are not just slowly going up, they're going parabolic, because everyone suddenly realizes, holy fuck, the bull market's back, and everyone tells their friends, they all make money, they tell their friends join, they make money, their friends join, and it's just this positive feedback loop of people making money, telling their friends, they join, they make money, they tell their friends. It's almost like a Ponzi scheme, right? Ponzi schemes work when people using the Ponzi scheme make money because they tell their friends. The best marketing scheme for crypto is prices going up and making people money, because what is crypto for? It's for gambling. It's for speculation. It's the riskiest asset class on the planet. When you come to crypto, you come because it's risky, because you can get rich quick, right? What's the best social proof that you can get rich quick? It's the fact that other people are getting rich quick. Imagine you went to high school with some retard, right? Some idiot. And you think to yourself, this guy's never going to get rich. He comes to crypto, he makes $100,000 on some tiny shitcoin early in a bull run. He tells everyone, and you're like, how did this fucker make this money? I got to get into crypto too. I can't let this guy get rich, and I'm just going to not get rich alongside him. That's the mentality that leads to the beginning of, or at least the middle and end of, the big long in crypto. It's when retail FOMO's in. So let's have a look at how you would account for the big long. And actually, let's look first at what the big long looks like on a chart. So the green section is what I would call the big long on the Bitcoin chart. Now, this is Bitcoin, this is not altcoins, but for Bitcoin, you can absolutely be running the big long. So I know a lot of people who, during these periods where it's early in the bull run, they were levering up heavy on Bitcoin and they were printing, because price basically goes only up without much of a pullback, right? It just basically goes only up with small pullbacks. And it's the beginning of the entry of basically retail. Now, this one here is a little bit of an odd one out. I would call it a big long, sort of, but this was more a short squeeze of existing players. This wasn't new retail money coming in to basically FOMO, right? This was a positive feedback loop of new retail. This was the COVID rally where everyone was coming into crypto. And this is the beginnings of the new bull run. We have a bunch of new retail coming in right now, okay? Now, does this mean the big long is going to continue? Doesn't mean that, but this was essentially a big long here, Okay, so how do you approach the big long? How do you make money from this? How do you what's the approach to, why do we need to understand this concept? Well, let's look at it from how you would approach it. So during the accumulation phase of crypto, so let's say, here, 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 you want to be in spot. You don't necessarily want to be adding leverage because the market could go sideways for a long time. And there's no signs that we're about to enter the big long because we're still accumulating, but you want to be basically building your spot positions. Now, dark green is where you want to enter the big long. So basically, once you've had a key breakout of a, accumulation region, you've had the beginnings of the uptrend, and then you have a retest of a significant level, you're getting, around this point is where you want to be looking to build that big long position. Now, let's look at it how it would have gone on a recent chart. And just to let you know, this is not an exact science. It's different every time, but this is a rough idea. You can see here that for Bitcoin, the accumulation range is like this region here. Let me see if I can make this a little bit tidier for you guys. Let's do this one. So you can see here, right? We had accumulation. Let's delete this. Oh, fuck, sorry, this is taking a second. We had the accumulation range, boom, breakout, retest, and this is where you build the big long, and you can see we've gone ballistic, right? Now let's look at it on the 2020 exemplar, right? I would say that right here is the level that we've been, trying to break above for about 2 years. And we finally got above that level. Now, I don't know if there was a retest here, but basically the breakout of this, critical region is where you're wanting to be looking for the big long. Because we've reached a certain point. We've gone up enough from the bottom where people are recognizing, holy shit, Bitcoin isn't dead. It's coming back. People are getting excited. People are making money again. See, people have made money here. And people are starting to get really, really excited, and that positive feedback loop kicks in. And you need to be getting in early if you decide to do that. And now the goal is that you're not trying to ride the big long for the entirety of the bull run. The goal is that as you get later into the market cycle, you want to be reducing the leverage. Not necessarily at the top, but just when you get later into the cycle, you want to be dropping off the leverage. Now, you're going to keep your spot positions. You're not going to sell your Bitcoin, but you want to reduce the leverage. Now, you're going to get to a point where you're getting to that final eighth of a bull run, and it's at this point that you want to be moving into stables. So you want to be pretty much mostly stables or only stables, and then only doing small related trades or investments, okay? And then, once it's clear that the bear market has kicked in, so more around this region, a way that you can tell a bear market is in is the right shoulder. So let's say prices are going up, the top is in here, price goes down, we hit the 0.618 fib level, right shoulder, break below these lows. This is where you can pretty much know that the bear market's in, okay? Let me show you what this looks like on a chart. So this is Bitcoin, this is the top. We break down, hit the 0.618 fib level, break below the lows here, and that's where you know the bear market is in, okay? So that's sort of how you would view it. Now, the goal is that you want to be out way before this level. You ideally probably want to be out, entering during that final eighth. So somewhere in this region, you want to have exited, majority of your spot positions. And you definitely do not want any leverage when this right shoulder is getting rejected, right? I can draw this again, actually, just to show you it. This is actually one way that people try and sell tops, sort of an off-topic thing. But when the top happens, price goes up, and it hits a level. And basically, if you just sell the 0.618 fib level, let's say that's the top, let's say that's the bottom. So like anywhere between the 0.5 to 0.618 fib level is where you'd be looking to sell if you're expecting the top to be in, right? If you miss the top and prices crash, sell the 618 fib as price bounces back on that first move upwards after it has that initial crash, right? But anyway, what I'm trying to say is that these are the stages of how you would play it, and this is how you would play the big long, okay? So let me show you again how to play the big long, how to pull off the big long. Now, if you're trying to pull off the big long as well, this is not necessarily me saying to use leverage, but this is me saying that you want to be really allocated when you are recognizing that we are near this point in the market based off market cycles and price action that are unique to crypto, that we're about to enter this period of an insane positive feedback loop. And you need to be looking out for when that feedback loop is looking like it's going to kick in. So the key to massive gains in crypto is to take excessive, calculated risk before the middle of the bull run. Everyone wants to buy crypto when prices reach a certain point in the market cycle, right at the top. Your job is to recognize when this is about to happen and be positioned accordingly. So you want to recognize when are people going to all come into crypto, and you want to be going very risk on just before that happens. Obviously, it's easier said than done, but that's the goal. So your job is to recognize when this is about to occur and be positioned. Most people, they fuck this up because they add the leverage as we get later and later and prices get higher and higher in a bull run. As their stack increases, their portfolio increases, so does their position sizing. So they start the bull run with 10K, they do $1,000 positions. Now they've got 100K, they're doing 10K positions. You should not be increasing your position sizing on your trades and investments just because you've got tons more money at the end of the bull run. The goal is that towards the end of the bull run, you're massively reducing your risk. You're not taking the same position sizes that you were earlier in the bull run. Early in the bull run, you take on the risk. Later in the bull run, you take off the risk. People do it in the reverse. They put on the risk late and they take it off at the bear market. Right? So if your position sizing increases as you profit later in the bull, you're doomed to lose all your money when the market hits its top, because it shows that you are increasing your position sizing without an understanding of how late you are in a market cycle and the risk that entails. So you succeed by adding the risk before others do, and you pull back the risk before others do. And it's the same shit as buy low, sell high. Take risk low, take off risk high. Same mentality, okay? So again, this section is about market cycles in crypto. It's about unique price action to crypto. This is an explanation for you on a unique sort of scenario that only happens in crypto. The S&P 500 is slow up, slow down. Crypto is a very reflexive asset class, very volatile, and majority of the price performance happens within a short period of time. And the positive feedback loop of the best marketing strategy being people making money makes crypto all go up at the same time and make most of the gains in a short time. And that is why we've covered it in this video. So I'll see you in the next video. Cheers.